The Reserve Bank Governor's take on negative interest rates. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at a little clip from the Economic Standing Subcommittee regarding just negative interest rates. And this is a question from Andrew Leigh to the Reserve Bank Governor. And I'll just bring that in now.
Thanks very much, Chair. Governor, thanks to you and your colleagues for joining us today. As we discussed in the last hearing, throughout your time as inflation has been below the target band, unemployment has been above the natural rate. Now you've put out forecasts which have core inflation remaining below the target band for the entire forecast horizon, meaning that you could conceivably go from your appointment in 2016 to the end of your second term in 2023, basically without once bringing inflation within the target band, your central mandate. It's pretty clear that other central banks are doing more, given where Australia's exchange rate is at. We've had a quarter of negative inflation. And I want to ask you in that context about your decision to rule out negative interest rates. That's been criticised by a number of commentators, Stephen Kirshner, Bill Evans. You've got the experience of other central banks around the world. There was a BIS survey, which you would know well since you wrote the forward, which found that other central banks that had taken rates negative thought the policy helped it achieve their goals and that the side effects were contained. So my opening question to you, Governor, is wouldn't a year of negative rates be better than a decade of zero rates?
So before we hear the Governor's response, what do you think, guys? Do you want a year of negative interest rates? Let me know your opinion in the comments. Let me know your opinion in the comments.
I don't quite see the trade-off quite like that. I make it clear, I haven't ruled out negative interest rates. What I've said is that they're extraordinarily unlikely. You know, in a world that's so uncertain and so fluid, I don't think it's prudent to rule it out, but it's extraordinarily unlikely. And if I can explain why, that's the conclusion we've reached. On the positive side of the ledger, I think the main benefit from negative rates is downward pressure on the exchange rate. If we were to have lower rates, then I think we'd see a lower currency as well. So that's the benefit, and that would be a material benefit. We've got to weigh that against the costs, and there are two here that I'd reference. The first is that negative interest rates, I think in most countries, do impair the profitability and efficiency of the financial system and ultimately its ability to provide credit to the real economy, which is really important. We're seeing this in Europe now. There are a lot of problems in the European banking system, but they're structurally low profits, and it's quite difficult for them to provide the credit to the economy that's needed. So the banking systems don't work as well with negative interest rates. They would also create distortions in our financial system because deposit rates would effectively be bounded at zero. That's what happens in other countries as well for most depositors.
Aren't we already like that with our cash rates so low? But anyway.
So a bank that financed itself with a lot of deposits would be a competitive disadvantage to one that finances itself in wholesale markets at negative interest rates. So there'd be distortions within the financial system as well there. So credit supply, I don't think, would be enhanced by negative interest rates. The second negative I just want to mention is that in many countries, there's increased concern that negative interest rates encourage people to save more, not spend more. Imagine I tell you, you put money in $100 in the bank, and in 5 years' time, I'll give you back $95. That's what negative interest rates mean. And in response to that, we're seeing in some European countries and in Japan, there's some evidence of this as well, that people say, well, because I'm going to get less from the bank in 3 or 4 years' time, I've got to save more. So negative interest rates can become contractionary from that perspective. So reduced supply of credit, and maybe some people save a bit more versus the benefit of the exchange rate. I think in the current situation, I don't think that the cost benefit justifies negative interest rates. It's interesting. Can I just make one more observation? Since we've had the pandemic, no central bank that's had positive interest rates has gone negative. and the central bank with negative interest rates has gone more negative. I think that tells you that the kind of the consensus amongst the central banks is that really there's not that much to be gained from here, from doing this, and perhaps the costs are greater than the benefits. If that consensus were to change, then, as I said, we haven't ruled it out. I think it's extraordinarily unlikely.
Let me take you up on two responses there. First of all, on the impairment of the financial sector, it seems to me you're effectively there putting bank profits ahead of jobs. In an environment in which our major banks have been unusually profitable, both compared to Australian corporates and compared to their international counterparts, that seems a mistaken call. Secondly, your contention that encourages saving rather than spending seems at odds with your evidence given to this committee last time, in which you said that lower interest rates boost spending on aggregate. One could tell some kind of...
Lower interest rates aren't negative interest rates. There's a difference. It's a psychological difference. You also got to... I mean, it seems counterintuitive, but that's how sometimes these funny things are. It's a bit funny. You know, I'd be thinking, oh, bloody hell, how bad is it that we've got negative interest rates? I really need to start stashing away. Can you see that happening? It might be good for precious metals.
The behavioural story as to why that changes at zero. But the bank so far has not attempted to do so. And your public statements on this haven't made clear as to what the direction of the effect suddenly switches when you go negative.
Yeah, well, it's an emerging area of research, and the at least when I talk to my peers in with negative interest rates, some of them say, look, in their countries, there's evidence that something changes at negative interest rates, that the mindset switches. That when you tell people they're going to get less out of from their bank than they put in, that worries them and they start to save more. So I think there is something different about going into negative territory. The evidence is still emerging because the experience with this is fairly limited. I think it's plausible and people are worried about it, and we're not seeing people go more negative as a result. And I'd take issue with the contention that I'm putting bank profits before jobs. What I want to see is the credit supply process work effectively, because we need banks that are profitable and that are willing to supply credit, and that the credit supply markets are not distorted. My concern, at least at the moment, is that negative interest rates would make credit supply more difficult, and that would hurt jobs.
But isn't having artificially low interest rates a distortion of the market? That's just a question that I put to you.
It's not about bank profits, it's really about jobs. And my current view is that negative interest rates wouldn't help jobs and arguably could make it worse. If that judgment changes, then we'll move.
Let me ask you about the term funding facility. It was aimed principally at increasing lending to small businesses.
So there we have the Reserve Bank Governor's take on negative interest rates. Now, this is a clip from the Reserve Bank with questions put to them by the Economics Standing Committee. I went through, I've got one part of a two-part series that you can go through where we, in our live stream, go through the whole thing. And I thought I'd pull out interesting clips just to share with you. And here we had the Governor's take on negative interest rates. Now, what do you think? Do you think it would be worth having a year of negative interest rates to kind of help the economy? Or do you agree with the Governor? How would you respond? Would you be worried? Would you be thinking, oh, well, damn, if we're going negative, I really have to save? And what about the idea of people actually saving more? You know, in some twisted type of way, it makes sense. It really does. I can definitely see that happening. But what, because, I mean, look at Japan. Look at all the countries that are doing negative interest rates. It's not really helping them, is it? And do you think they'll see that just their own interventions in the market are distortions of the market? Because look at our interest rates. Look at how low the cash rate is. Let me know your thoughts and opinions in the comments below. Would you be keen for negative interest rates? Can you see it happening here in Australia? Or do you trust the Governor? Or are you worried about some of the up-and-coming junior governors that will take his spot? That probably worries me more than anything. As always, thanks for watching. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve or Kucoin. You can buy merch from HeiseSays, use Gore Pass from the Perth Mint, or support us via PayPal. Take care everyone, have a great day, and I will see you all in the next episode.